I'm Judy Shaw for NYSE Floor Talk. Joining me today is Ivan Kaufman. He is founder and CEO of Arbor Realty Trust. Ivan, it's great to see you. Thanks for joining me.
Well, great to be on your show.
A quick note to viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. Now, Ivan, tell me, what makes Arbor Realty Trust different?
So what makes Arbor Realty Trust different than other mortgage REITs is that we are a multifaceted operating company with a variety of different products. Most mortgage REITs generally just have one product. They originate loans, they hold them on their balance sheet. That is just one aspect of our business. We are also an active Fannie Mae, Freddie Mac multifamily agency lender, where we originate loans for sale to those agencies. We also originate our own product for sale and securitization into the private label market. And we're extremely active on the single family rental residential business. So in every single climate, we're very active with different products, depending on where interest rates are, depending on where market demand is, and depending on what the consumer's preferences are. So we're not just reliant on one product, and we have multiple income streams.
Now, you've been a major player in the single family sector, a sector that's recently begun to attract a lot of institutional money. Why have you been so bullish on this space?
So it's really a fascinating industry because there's one fact I'm going to give you, and I think I gave you a few slides to support it. There are more people living in single family rental properties than there are in multifamily properties. Conceptually, that's hard to fathom because you look at an apartment building and you say, wow, there's so many people living in there. But there are more people living in these single family rental properties. So we said to ourselves a few years ago, let's look into that business. It's a big business. And what we found was that most of that business was dominated by small owners and operators, individuals who own 1 to 10 units. In fact, even today, 70% of the investor properties, people who live in those properties, are owned by individuals, not big institutional investors, not big companies. That's just a recent phenomenon. So we said, let's get involved. I have an enormous background in the single family residential industry, being one of the biggest founders of a company that dominated that market in the late 80s and early 90s. We have a lot of expertise. Let's get involved. And we had no idea how quickly this market would evolve and develop. And we're right now in stages of a market changing right in front of our eyes.
Let's talk about the build to rent market. Tell me about this market and why it's growing so rapidly.
So the build to rent is a fascinating market. And I think it's gotten a lot of attention because of COVID and because of the millennials. I think there was a trend already beginning before COVID hit where people were moving out of some of the urban areas. Household formation occurred a little bit later. So the trend started. People started buying homes, moving out into these areas. And whether they buy homes or rent homes, it's the same desire: live in a home, live in a community. Now with COVID, everybody said, wait, we got to get out of the urban areas. We got to move our families out. And they have to move out. And if they can't afford to buy a home or it doesn't fit their economic profile, they rent a home. So renting a home became very high in demand experience. Now, there are two things that I'd like to talk about to distinguish the market. One is the aspect of developers buying land and building build-to-rent communities. It's an amazing opportunity for people and for builders. So you buy land, you build a community, and you build it with the amenities. So you get the best of all worlds. You get a home, you can rent, and you get amenities. And because of the efficiencies that have evolved over the last several years, you can actually build that product in a very similar cost to what you build a multifamily product. So consumers now have a choice. Do I go into an apartment building or do I go to a detached single family home with amenities? Well, a lot of people want to go to that kind of community. So that's on the rise. The second opportunity that came about, and it came about recently, is when big builders build communities for sale, they never used to sell any of that for rent. Now it's become accepted. So if a big builder is building a 500 unit community, they may sell in bulk 200 units to an institutional investor who will turn around and rent those units. So now consumers have a lot of choice. Do they buy or do they rent? And institutional capital has jumped into this space to make it more affordable in certain ways.
All right, that's very interesting. All right, so now Ivan, tell me, what will a post-pandemic world look like, and what will stay the same, and what will change? What do you think?
Wow, that's a crystal ball. If anybody knows the answer, they get really, really rich. So, listen, there's so much that happened with the pandemic in terms of changing consumer behavior. And whether remote working becomes a fraction of the way it's done, a part of the way it's done, it will have an impact. But I do believe, in many regards, people will be returning to offices, maybe with more flexibility. They'll go to office a couple of days, they'll work remotely a couple of days. There'll be a mixed bag, but you cannot not go to the office. You can't have that collaboration. You can't have that momentum that's created by team meetings. Yes, there's a lot of benefits to remote working, but I think there'll be a combination. In terms of housing trends, the housing trends are very clear. Home ownership is on the rise, right? It went from the real highs of 68%, pre-financial crisis. It dropped to the low 60s, and now it's around 67%. The only problem you have with home ownership right now is that you don't have enough homes, and there's huge price appreciation. Consumers don't have a choice; they're being priced out, and perhaps some of that is going to be turned into where the institutional investors are coming in to buy those homes and rent them out. So I think there'll be a little bit of a trend. Home ownership will continue to increase. I think the market for single family rentals will increase. So that'll be a really, really great asset class to be in. And I'm glad Arbor Realty Trust is front and center in those markets.
All right, and finally, Ivan, how has Arbor's strategy evolved throughout the pandemic, and what is your outlook for the rest of 2021?
So it was really interesting come the pandemic, because I won't be shy about it. 2020 was Arbor Realty's Trust best year. Now, let me put that in context. We've had 5 great years. That was our 5th year. We've been the #1 performing REIT, but last year we just blew it away because we're multifaceted in our business approach. The Fannie Freddie agency business, as we call it, that was the only liquidity in the market. So that took off. It dominated the market. We excelled. And now the market's changed a little bit. Now the single family built to rent market is exploding. We have almost $1 billion worth of loans either closed or under application, which will close. That's up from 0 2 years ago and up from 50 million last year. So that's dominating our platform. Our bridge program to people who are buying properties and they're not sure where they're going to hold them, where interest rates are, that's doubled in volume. And our own securitization of our own products have grown very nicely. So 2021, we think, is going to be another outstanding year. And it may not be as prevalent in certain products, but it's definitely going to be great in other products. So we're very excited about this year.
All right, well, Ivan, it's been wonderful to catch up with you and to have this conversation. Thank you so much for joining me on NYSE Floor Talk.
Pleasure as always. Have a great day. Nice talking to you. Take care.